again, thank you. I say in jest, but tongue in cheek, but thank you for allowing me to commandeer these calls the next 5 weeks. I think this is going to be a tremendous advantage to the Dream Team and beyond. I'm sure we'll have people filtering in as we go. But guys, just so you know, the next 5 weeks are going to be really, really tight. So we may not, we'll probably just dive right in, okay? With a brief intro. But without further ado, it's just super exciting to me. This is a true gift. We have we've got Jeff Sigworth on with us, guys, and Jeff, I'm sure you can unmute yourself, but I sent everybody Jeff's bio. He has worked with law enforcement and corrections professionals across the country, with our sister company Assura's PEP program, also under the Quility umbrella. Jeff specializes in IULs, debt-free life annuity sales. And over the next 5 weeks, as disclosed in that email, we're going to be doing some really, really exciting stuff. So, and that's all thanks to Jeff and the generosity of his time. Jeff is Director of Advanced Market Training and Sales Support at Quility. So you're hearing from the best of the best all the way up to the top. And he has personally written on his own pen, correct me if I'm wrong, Jeff, but between 600 and 700 index universal life policies, again, on his own pen.
That's right.
For employees across the country. So again, without further ado, Jeff, I turn it over to you.
Well, thanks, Mark. And whatever Mark says is right. It's true. Because that made me feel really good. No, it is true. I've written, 600, 700, maybe even a little more IULs. I've never done mortgage protection. I've been in the business 13 years, and I've only written 6 term policies. Everything I've done is cash value life insurance. So this is kind of what hits home with me, and this is why I'm sitting in the chair I'm sitting in. And it's good to see some familiar faces. Mark, good to see you again, buddy. We met, 5 or 6 years ago. Betsy, I saw you roaming around here. Muhammad, so I know some people on here. But if I haven't met you yet, I'm Jeff, and feel free to reach out anytime. I'm a super casual guy, pretty laid back. So if you need anything, don't be afraid to reach out. So what I'm going to do is I'm going to take you guys on an IUL series, and what I'm going to say might be a shock to some of you. What I'm going to say might be completely different from what you've been taught already, and how you structure IULs and how you sell them. So if that's the case, don't worry, we'll get through it together, and we'll go from there. Does anybody have any questions about IULs or anything moving forward? Questions, comments? Andrew, is that you raising a hand, buddy? All right, what's going on?
Yeah, no, you said to reach out to you. How do we do that?
It's jeff.sigworth@quility.com.
Okay, thanks.
I'm sure some people on here have my phone number. I know Betsy does.
And
I know some people have my phone number. But yeah, jeff.sigworth@quility.com.
Everyone that got the invite will be receiving the address and his contact info via email, right? So we'll make sure to do that. And if we can, unless it's just burning, let's save questions till the end, or until Jeff makes himself available for questions at certain points, just to be respectful, because I know we're going to be packing in quite a bit of education here.
Yeah, I'm going to go over 2 modules today. If you guys have something, again, just I don't want you to forget a question. I'm going to stop, restart another module. We're going to do the intro to the IUL and how we find IUL clients. Okay, sound good, guys? All right. Let's roll. Can you guys see my screen? Can you guys see my screen? I can't.
Yes.
Yes.
Yeah.
Yes.
Are you seeing the present? Are you seeing my
Yes.
screen, or are you seeing my screen, or are you seeing the clean version?
We're seeing Quility intro.
That's it? No, it's all green?
Yeah.
All right, cool. All right. What the heck is going on here? All right.
It's also showing next slide though. Just so
Is
you
it?
know.
It is.
Yeah, it's still
Yeah, we're
showing
seeing
next slide.
full presentation mode.
Is that better?
Yeah, there you go.
All right. So what we're going to go over today in this one is, what is an IUL? What's the history of the IUL? What does an IUL do and what doesn't it do? How it compares to a 401k, and how an IUL can protect your most valuable investments. Okay? So what is an IUL? Obviously, it's an acronym for Indexed Universal Life, and it's a retirement plan first. Think of it as a tax-free pension. Okay? An IUL should never be sold for a death benefit. Okay, it is not the Swiss Army knife of all insurance policies. It's not. It is sold for tax-free retirement and tax-free retirement almost only. I mean, yes, the life insurance is a nice ancillary benefit, but a lot of it's going to go away if you structure it properly, the death benefit that is, and borrow against the death benefit. So it's a retirement plan and a retirement vehicle that comes with a death benefit. Now, in 13 years of growing an agency and teaching people to sell these things to law enforcement, corrections folks, and sitting here at Quility, I've gotten more out of this statement with clients and agents that I want you guys to think of an IUL as a Roth IRA married to a permanent life insurance policy. And I say to clients, if you can have that idea kind of rolling around in your head as I go over this thing, it'll do us both a favor. Okay? I'm like, sure. But that's kind of how I want you to think of it, okay? Section 72E and 7702 of the IRS code is the language that allows us to have and hold cash value in any life insurance. So you DFLers, it's 7702 that allows that to happen. Any cash value inside of a life insurance policy is dictated by that IRS code. Yes, I've read it. Yes, it puts you to sleep. It's not exciting, but I'll give you portions of it anyway, okay? So you guys can unmute. Sugar. Get a little bit carried away here. Who can tell me the original purpose of whole life? Who remembers what whole life was? What was the purpose of it?
Final expense.
Yeah, basically a final expense, or it put you in the ground, right? Cover your final expenses.
Death benefit. Death
benefit. Wealth transfer. Okay. The purpose was to leave that death benefit for one's entire life. You paid up until you were 60 or 65, and when you retired, you had a paid up policy, and the purpose was to pass along that death benefit for other generations. Okay. And then now this isn't DFL. This is our grandparents. This really is our grandparents' whole life, not participating whole life. But clients overpaid for that death benefit. Okay, while the death benefit was cheap, then they had enough money, and the life insurance company made enough money off of them to provide that lifelong death benefit. It's really simple. It was just a lifelong death benefit. Where was the investment?
Insurance company.
Where was the investment for the client?
The cash value.
No, there was no cash value.
There wasn't any.
There wasn't any. There wasn't any. That's where buy term and invest the rest came from. Life insurance got that money and got to hold that money. Okay, so there was no investment. There was never meant to be an investment, and that's where buy term and invest the rest came from. Okay. Then they got life insurance got a little bit clever, and they came up with universal life. So who can tell me how a UL works? Can you guys tell me how a UL works?
You just have some flexibility on your premiums.
Who said that?
Tom,
good job, buddy. That's the word I was looking for. They provided more flexibility. Okay. There was an interest rate. The money that you were overpaying got an interest rate instead of the life insurance company getting that interest on that money and holding that money. It allowed the client to be in control of the death benefit. So where there's flexibility around that death benefit, you could keep the cash value in there, keep the death benefit high. And it also allowed for an exit strategy where you could borrow against the cash value, borrow against the death benefit using the cash value as collateral. But what was the problem with ULs? What happened to ULs in the 80s and 90s? For those of you with a little gray in their beard like me, who remembers what happened? Well, in the 80s, I was still pretty young, but
They ran out of money to pay for the cost of insurance.
yeah, well, good job. I can't see you guys because I'm better on Zoom than I am this. But what's your name?
Paul Brooks.
Paul, good job. So the cost of insurance ate up the cash value. Why was that? You guys know why that was?
Insurance got more expensive the older they got.
Yeah, and it was, and they had these high death benefits, and they expected a return, these huge returns, but they didn't account for inflation, and that's really pertinent today. I'm going to teach you guys in the next 5 weeks or so a lot about current events. I think a lot about what we do with IULs, DFL, annuities, all has to do with current events. So if you don't understand how interest rates affect our business, hopefully in the end of these 5 weeks you will, because it's a big push on our leads. And I've been in the business 13 years and never bought a lead. That's another story. But leads, it's going to affect how these things perform. It's a big deal. So UL, they cannibalize themselves, and a lot of people got a negative, just a bad taste in their mouth, a negative connotation with respect to life insurance. But we didn't know what we didn't know at that point. So then the life insurance industry got clever again, and now we have what's called index universal life, or the I. I want you to think of the I as interest or index, and it's a UL on steroids. That I is what allows this thing to cook with respect to cash value. It has a chance of capturing more interest than the ULs ever did, right? Okay, so now the best IUL companies have a capped loan rate. They have high caps to get interest on the client's cash value, but they also have a capped loan rate. When you borrow money out of that policy, what could happen is the interest rate gets too high for borrowing that money. It's usually based on the Moody's corporate bond rate. Not some of our DFL carriers and participating whole lives do have that. Some, like Foresters, is just set by the company. It actually just went down. But IUL companies, for the most part, are based on the Moody's corporate bond rate, which means they have to have a cap on that strategy. So when you're later in life, if interest rates go up, you're not paying too much to get at your money. Okay. And what does an IUL do? Let's talk about what an IUL does. It protects a client's income and family. It does provide that death benefit. Okay. If you have a 401k, if you have a 401k and you pass away, what happens? What does your family get?
Nothing.
Well, if you have a 401k worth $100 grand, what does your family get?
The
The
401k.
after-tax dollars.
Yeah, after tax, right? They don't get the full $100 grand. They get a swift kick in the shorts because they're going to have to pay the IRS on that $100,000. Okay. The IUL protects our clients from market risk. They never lose money, right? There's a cap and a floor, or in the volatility control indices, you can't lose money. But in a 401k and an IRA and a 403b, 457, TSP, anything like that, you're at risk of the market. The third thing an IUL does is it protects our clients from taxes. Does anybody here on this call, 30-some people, think that taxes are going to go down in the future?
Absolutely not.
It's impossible. It's a math problem. It's a 4-letter word. It's a math problem. Okay. Mike and I look at it all the time. We're always constantly looking at that debt clock. Okay. And I've had agents that would show clients the debt clock and say, we're approaching not only 30 trillion in debt, but we're approaching $150 trillion in unfunded liabilities. And if you look on debtclock.org on the lower right side, that unfunded liabilities is what it's 140 some trillion right now. That's the money that our government has earmarked it's spent. It's done. It's spent, but we don't have the revenue to pay for it. It's scary when you get involved and get behind the curtain on that and under the hood. It gets a little scary. And last but not least, the first one is, God forbid something happens. Like if I don't make it home tonight, probably need a death benefit. But what if I live until I'm 98 years old? The IUL has safeguards in it that protect you from ever outliving your money. Okay. So this is a very powerful slide that I put up. Okay. You put this up for somebody with a 401k and ask those questions that I just asked, pretty straightforward. Okay. And then I usually do this with clients. And I'm going to ask you guys, so unmute yourself, talk freely. What are some of the biggest purchases and investments that you guys have in life?
Homes, cars.
What else?
School.
School, that's a good one.
Mm-hmm.
Education, that's a
Education for our
non-tangible.
kids.
What's that? Say that again.
Is that education for our kids and getting them set up in life?
Yeah. How about your health?
Mm-hmm.
Education, you said that's a good one. How about retirement? Retirement
Sounds
could
good.
be almost as big as a house, right? Definitely more than a car. How much is your family and your income worth to you? It's worth a lot. So let me ask you, Mr. and Mrs. Client, do you have homeowners insurance?
Yes.
Do you have car insurance?
Yes.
Do you have health insurance?
Yes.
Right, I put Whole Foods, your whole paycheck, as I call it. But we go to the gym. We try to eat healthy. We try to stay active. We have health insurance. Is your kid's education more important than your car?
Yes.
Probably. How about your retirement? Your retirement's probably could be in some places of the country could be more expensive than a house. How about your family and your job? Okay. So life insurance in the IUL protects those most valuable investments. And Mr. and Mrs. Client, let me ask you, do you have insurance on that cell phone? Right? So IUL, not mortgage protection insurance, not final expense insurance, but it could be, education. My daughter has an IUL that she's going to pay for college, and we can get into that later. I have an IUL for retirement. My wife's a DFL person. I'm the IUL. But those are some of the things I like to introduce to a client, introduce to you guys on that intro to the IUL. So what questions do you have on that? Anything I said that you have a question or would like to talk about or unpack?
You go back to the IUL versus 401k slide for us.
Sure.
Thank you.
Oh. That one right there?
Yes, perfect. Thank you so much.
You got it. What else? Guys have anything else? That's it from the intro. No, I didn't scare you with tax-free retirement only. No final expense. No, don't use it for mortgage protection. It's not the Swiss Army knife of insurance policies. You guys are all cool with that?
Hi, Jeff. This is Robert. I have a brief question.
Yes, sir.
You mentioned there are safeguards to never run out of money.
There are.
Could you mention that? Just maybe talk a brief minute on that. I think it's how it's structured, but maybe the rest of it.
Yeah. I'm really particular about what IUL companies to use and not to use. And I'm really particular about how to set up an IUL. An IUL can be one of the best tools in the insurance world. It can also be one of the most dangerous. And a lot of the negative connotations associated around cash value life insurance and, quite frankly, life insurance agents is improperly set up policies. Okay. So I think you can only set up an IUL. Mike and I talk about this all the time. Minimum death benefit, max income. You have to show income. You can't just show that big number because that big number of cash value you're not able to get that tax free. The power of the tax free nature of IULs comes in the form of loans. Okay. Now, if you set it up minimum death benefit, maximum cash value, I'm going to get a little insurance nerdy on you here. So Robert, stick with me, buddy. All right. When the cash value supersedes the net death benefit inside of an IUL, the cost of insurance actually goes to zero. Okay. We'll get to that on the advanced mechanics. We'll get to that. But the sooner you can get a client in that situation means that the chance for it to cannibalize goes down significantly. That's number one. Number two, there's a cap to the loan rate. Okay. Now I know some of you, this is going to sound like Mandarin, and I'm sorry. For those of you that speak Mandarin, it might sound like another language, but when you have a cap, when interest rates go up, most IUL companies charge you more to access that money. Okay. What happens when you have a cap loan rate is, for example, Fidelity, F&G, Fidelity and Guarantee is the best IUL on the street. That loan rate is capped at 5%, meaning they will never charge a client more than 5% to access their money. But as interest rates go up, what do cap rates go up to on the index? Do they go up or do they go down as interest rates go up? You got a 50-50 shot.
They go up, Jeff?
They go up. Why do they go up, Danielle? Good job. Why do they go up?
Well, it's just like taxes. You've got more to cover. So, I mean, just thinking about it in my head, you need more money to break even, I guess.
Interest rates, when interest rates go up, your cap rates go up because let's say you're putting $1,000 away a month away in your IUL. That $1,000 doesn't change. So when interest rates go up, what happens to money? Does it get cheaper? Does it get more expensive? Is it worth less or is it worth more when interest rates go up? No, it's worth more when interest rates go up.
Oh, okay.
Okay, supply and demand of money. So when money is worth more, it buys more. So what the insurance company is doing is buying more cap with the same amount of money. Okay, and understanding those intricacies of an IUL, you never get into a conversation with a client with that. Ever, never, no way. You lose them. Okay. But knowing that yourself, it can give you confidence and conviction that you're doing the right thing for your client. And Mike and I talk about this all the time. I think I'm told I can only affect 10% of your career. Okay. Like I can only teach somebody 10% of what you need to know. Okay. But I challenge that and I say, I can give you 11% because I can give you that confidence and conviction. A lot of what we do is confidence. A lot of what we do is believing in what we're doing, and that conviction just exudes out of you through the presentation. Okay. And one of the ways to do that is to really understand what you're selling, why you're selling it, and knowing in your heart, gut, and soul it's the right thing for the client. Okay. So Robert, I know that was a little bit of a long-worded, loquacious answer, but I hope it answered it. Cool. Awesome. Any questions before I go on to the next section?
No, Jeff, please continue.
All right, cool. All right, so now we kind of know what an IUL is. Let me find you guys again. I'm much faster on Zoom, guys. I'm telling you right now, I'm much faster on Zoom. Now I'm going to teach you how to find IUL clients, and this is kind of near and dear to my heart a little bit because not my role, but what I'm doing here at Quility is going to change a little bit. I'm going to be responsible for bringing some of this stuff and processing and teaching some of these processes that I'm going to go over today. Do you guys do a financial fire drill or some kind of FIF?
No.
No.
Yep.
Okay.
Yes.
No.
Yes. Yes. No. Some people are. Some people aren't. That's what we're finding. So the word of the year I hear is process. So what I'm going to do is I'm going to get you guys to be just ninjas. We call it FIF on the Assura side of things. I'm going to get you guys to be FIF ninjas. Okay. You are never, ever, ever going to miss an advanced sale opportunity. Either you're resetting it for yourself or you're edifying a subject matter expert, an SME, and resetting it for them and getting split out on the case. Okay. Right now I'm working on a bunch of different projects to bring that to everybody. So you guys are getting a little bit of a head start on that. Hope you guys are okay with that.
Yep.
So really it comes down to this thing, the FIF, and I think I have the Assura version in here. So I'm sorry, it's not the Symmetry version. It's more the Quility version that we use at QMS because I teach a lot of the QMS stuff. But we're going to talk about the FIF. So I'm going to tell you the intro to the FIF. Now I say, because through processes and certifications and stuff, I say to every client, hey, look, my license allows me to protect you in 5 key areas. Okay. It allows me to protect your family and protect your income. Okay. That's a death benefit of any kind. It allows me to protect you from market risk. Okay. My clients don't lose money. Okay. Allows me to protect you from unnecessary taxes, protect you from unnecessary interest and debt. You guys should know where that is. That's DFL. And the last one is my license allows me to protect you from outliving any retirement dollars. Now, I'm going to tell you guys a true story. Other than the interest and debt, because DFL is new, I took off work and I went to Reno to watch March Madness. It was an all you can eat, all you can drink thing, right? So I'm watching, so you can understand my state. I was watching, it was either Prudential or Nationwide or one of those big insurance companies. They said, we're going to protect your family. We're going to protect you from market risk. And I went, oh my gosh, they're talking about an IUL. And I wrote it down on the back of the napkin. And that's where I got these 5 things. Now, this is me because I can do those. But I want you guys to start getting intimate with those things, because if you can do all of those, then you can sell an IUL, then you can sell DFL, then you can sell an annuity. Okay. And it's kind of something that your clients really want to hear. You don't have to incorporate it, but just get used to it, because the IUL presentation incorporates 4 of the 5. Okay. So I tell my clients, if I can protect you in any combination or all 5, I'm doing my job. Okay. My job is to provide as much value as possible, as much value as I can from a financial wellness standpoint. And you know what? I'm not here to reach in your pocket and create another bill. If I can just get some information from you, okay, and find out how you're spending your money, I might be able to do all of those things without costing you another dime. How's that sound? Okay. And I tell clients that, and I go, guys, if I take one more penny out of your pocket, you can shut off the Zoom call or you can kick me out of your house. Either way. Okay. I'm going to try to do it. Now, if I know for sure that they're contributing to a 401k or something, I'll be that confident. But I'll say, look, I'm going to try to do it without any money out of pocket. Now, what does that do? What does that kind of verbiage do to someone?
Well, it certainly will pique their interest, and they'll want to know more about what you're talking about. They'll want you to go further in depth so they can see how they can benefit from it.
It'll grow
Also put them
confidence
at
in
ease.
it. Yeah.
Say that again. You guys get
Sets an expectation. Sets an expectation.
Yeah, I'm setting an expectation that I'm not here to screw you over, basically, right? I'm not
It'll grow
here.
confidence in yourself.
Yeah, and it kind of lets their guard down. Okay, it lets their guard down to open them up to maybe hearing more. Whoever said that first, it kind of makes them go, oh, okay. Right? And if you can do that, now I always when doing this, I always ask permission to move forward. Do you mind if I ask you some questions? Are you cool? And I kind of, guys, I say this all the time. You're going to get sick of hearing me say this if you take training classes with me. Use your spidey senses. Use your talent. You guys are all talented in your own way. I don't want you to be Jeff. I don't want you to be Mike Resma. But are Jeff Sigworth and Mike Resma successful? And can we do it? Yeah. But we're different people, right? There's a lot of things we do the same, but there's a lot of things we do different. So I say all the time, use your talent and trust your spidey senses. Okay. So now that we've got the client kind of, whoa, hey, how the heck's this guy going to do this, right? We were dug in. We're not spending any more money tonight. And all of a sudden, this guy says he's going to do this without having me spend any more money. What? Okay. Gives you permission to move forward. Okay. So on the mortgage information, okay? On the mortgage information, if I was going into your house with a mortgage, I would say, who wants to role play with me? And somebody out there role play with me.
I will. Count me in, Jeff.
Okay, so give me a name. I don't know people's voices on your team yet.
Hey Jeff, I will. See.
Did I hear Michelle? Shell or Michelle? Shelly, is that what it was?
Mm-hmm.
All right, Shelly, who's your? May I ask who your lender is on your mortgage?
I don't even know.
How about Wells Fargo? There you go.
That's pretty bad, isn't it?
Yeah.
It's Ornell. It's Ornell. Fred Dork.
Ornell. Okay. And what's your interest rate?
It's 3.2.
3.2. Is that a refinance or a new purchase?
That's new.
Okay. And then is that a 30-year note?
Yes.
And what's that loan amount? What do you owe on your home?
158,000.
158,000. And may I ask your monthly payment?
It is 710.33.
710.33. Very specific. And are you making any overpayments to that mortgage?
I am not.
You're not? Okay.
Nope.
And then since it's a new purchase, how much did you put down on your house?
50,000.
50,000? Okay, great. So we got about $50,000 in equity then. Okay. Now listen to this. Now I obviously need to know the mortgage information because I'm there. If you guys are there for mortgage protection, you have to know the mortgage information. It's mortgage protection, right? And I've never done that. But how would I get into all this other stuff? Well, there's what we call transitions that'll get us into the other sections of the FIF. Ultimately, we'll get into the section where it's retirement and assets and tax-free nature and stuff. But I want you guys to hear because I'm giving you a preview of the process that's going to come down the line. So what I'll say is, okay, Shelly, and listen to my tonality here. Listen to my pace. Listen to my tonality. Shelly, unfortunately, a lot of my clients don't realize that, God forbid, something does happen to you. Not only is your mortgage debt passed along, but so are other debts. Okay, so for example, do you have any car loans or student loan debt?
I do.
Okay, do you see how I transferred into that? Now I've given myself permission to start asking you about debt information. Okay, it could be a DFL sale. I'm not pro IUL, pro DFL, right? We're gonna find whatever fits that client's needs. Okay. So tell me about your auto loans, Shelly.
I just have one car.
Okay. How much do you owe on that car?
I owe 25,000.
Nice. What kind of car?
The Kia Sportage.
Okay, cool. And may I ask how much you pay a month?
I pay $429.50.
For any overpayments on that?
Nope.
Nope. How about you said you had only had one car and you said any student loan debt?
No, I do not.
Okay. How about any personal debt, home improvement loans, anything like that?
Yeah, we just put in a new kitchen.
Okay. So okay.
That was over 25,000.
Okay. And 25,000. And how much do you pay on that a month?
I pay $324 a month.
$324. Any overpayments?
Nope.
No. Anything else in that home improvement? No solar panels or
Nope.
no personal loans?
No.
Any personal? How about credit card debt?
Very little. I have 1,000.
1,000. Okay. And do you pay that off every month? Do you
Yes.
make overpayments?
I pay it off every month.
Okay, great. Any other debt?
No, just my house.
Just your house. Okay, cool. Now, just like debt gets passed along, but so do assets. Okay. So for example, do you carry any funds in a 401k, any IRAs or any big lumps of money, sums of money that could act like life insurance if you were to pass away? Okay. So now I've given myself permission to go into these assets. Okay. So Shelly, let me ask you, do you have a 401k or anything like that? Any kind of retirement accounts?
I have debt-free life.
Well, you do. So you have a participating whole life.
Yes.
Okay. And what company is that with?
That's with F&G. No, it's with
Foresters?
Foresters, yeah.
Okay.
Great. Lafayette, I mean. It's Lafayette.
Oh, Lafayette. I'm sorry. No, I'm just teasing. I'm just teasing. Pretend like you have a 401k with me.
Okay. All right.
So do you carry any funds like in a 401k?
Yes, I do.
What's the current value of that 401k?
About 200,000.
200,000, and is the purpose retirement?
Yes.
And are you contributing on a monthly basis?
I am.
And may I ask how much you're contributing?
6%.
6%. So how much do you make a year?
I make about 60,000.
I went to public school, say 100 grand. I can do the easy math.
Okay, 100 grand.
There you go. Okay, so you're $500 a month. See, I went to public school in Pennsylvania. And are you getting any match on that?
What was that?
Are you getting a match, a company match?
Yes, I'm getting matched 6%.
Are you getting an additional 6%
Uh-huh.
on top of that? Okay. So you're actually putting away $1,000 a month going in there. Okay. And do you by chance know who the provider or custodian of that account is?
No.
Okay. Any other retirement accounts? Any other a pension?
My husband gets a pension.
Oh, who does he work for?
From his old job, and he gets about $182 a month.
Okay. So did he work in the public sector or
Factory.
factory? Okay. So is that in the form of an annuity then?
I guess, yeah.
Okay. When's the last time you guys talked to somebody about their survivorship options on that? So if he were to pass away, how much of that would you get?
I have no idea. That's a good question.
Yeah. See, so one of the things I like to do with my clients is maybe we can set aside a time if your husband's not here, but maybe we can set aside a time with him to determine what that survivorship option is. I know it's only $182 a month, but let's pretend it's $18,000 a month. That's a little high for a pension, but would you rather know now or after your husband's already passed?
Oh, I would rather know now, definitely.
Yeah. Because we can do some things that are called pension maximization. There's a lot of things we can help with there. So I think we probably need to get that information. Wouldn't you agree?
Yes, absolutely.
Okay, great. And you don't know who the provider is?
I can't think of their name right now.
Okay. Any annuities or bank products, CD, savings account?
No, I have a small savings account.
Okay, may I ask the value? Small is relative to different people that have different amounts.
It's got $3,500 in it.
$3,500, just rainy day, car breaks down, something
Yep.
like that. Okay, cool. And do you contribute to that on a regular basis?
I try to put $25 to $50 a weekend.
Okay, cool. And anything else? Any IRAs? Any money under the mattress? Anything not getting a preferred interest rate?
No, that's about it.
Okay. Then here I would transition into existing life insurance. I'll just go through that real easy. Do you have any, whatever it might be? And I'm looking for opportunities at 1035 exchanges. I'm looking at premium that they are paying that I might be able to reallocate. Okay. So if you're not getting, the first and foremost, when you guys take this form, and we can get together some other time and practice it, or you guys can practice it amongst yourselves, or I could get together with you with Mark's blessing, and we can do a little, just a little training on you guys taking that and role playing. But first and foremost, if somebody has a 401k and they're not getting a match, that is first and foremost. Use your spidey senses should go up and you should automatically think IUL or DFL, depending if they have debt or not. Okay, the 457 and 403 are never matched. So if you have this, if they're putting $500 a month in, and good job, Shelley, for saying 6% of 100,000, that's perfect. If she didn't have a match, now I am honing in on that $500 a month to reallocate. Okay. Now, somebody that is getting a match, and I'm going to use a little bit different numbers here. Okay. Let's say they've got same thing, 401k, it's $87,000. They're using it for retirement. They're paying $600 a month, but they have a 3% match. Again, you're going to pay attention to that $600, and we're going to assume the client's making 100 grand because I went to public school. I'm quick with really easy math, but when it gets complicated, I get really slow. 3% of 100 grand is $3,000. Okay. Mm-hmm. So if they're getting a match of $3,000, how much is this person really contributing? Total, their portion Their portion, how much are they contributing?
7,200.
7,200. You're right. Good job. They're contributing 7,200. But if we back out the $3,000 match, how much now are they contributing out of their own pocket? Or not out of their own pocket, but that's not getting matched. It's inefficiently going into the 401k. It's 4,200.
$350 a month.
Yeah, boom, look at that
$350
math. $350 a month is now fair game to reallocate to an IUL. Okay, who doesn't want an extra $350 a month to reallocate or add to a DFL budget or an IUL budget? Okay, so I think you guys can see how somebody's not getting a match, or they're contributing, in Shelly's case, above and beyond the match. In her case, it would have been $500 a month that we're reallocating. Okay, any questions there? Now, I did this next chart I put up, and it's people like it. It's not perfect. There are some issues, and when I'm on Zoom, I can draw, but I don't know how to draw on this thing. But I use this questions-based Socratic pivot chart. I did it for QMS for agents that were having trouble. It's really simple. This thing is so simple, guys. Do you have any current or old retirement accounts? If they say no, and like let's say you guys came into my house. My wife's 6 years older than me, so my wife's 51. But if you came into our house and we said, no, we don't have anything for retirement, they know they're behind the 8 ball with retirement. So you just flat out ask them, hey, how much do you guys feel comfortable saving for retirement? And get a dollar amount. I don't want you eating beans and rice and top ramen, right? What do you feel comfortable putting away for retirement? Have them give you that number. That number, if they have a bunch of debt, you pivot over to DFL. If they don't, and they're under 50, 50 is kind of that gray area with an IUL. Anybody older than 50 is going to go participating whole life. But make your choice here, DFL or IUL. DFL if they have debt. If they do have a current retirement account and it's not with their current employer, then you would go fixed indexed annuity over here. But if it is with their current employer and they're not getting a match, you go back over it. You have 3 or more pieces of debt. If they are getting a match, are they contributing over and above the match? So in our case that we just talked about, go back over here. If they aren't and they're over 59 and a half, you might want to check with the custodian or the plan administrator to see if they can pivot into a fixed indexed annuity. Some plan administrators allow you to do that. Okay. Also, if let's say, and I use this, I don't know if you guys have ever been here to the office, but there's a veterinarian. So let's say I was a veterinarian, then I got hired by Quility or Symmetry. Okay. And I had $100,000 with that vet. Well, if I brought that $100,000 in a 401k into my new 401k, most plan administrators will allow you to back that same $100,000 out. Okay. And you can back it out and do anything you want with it. Not the interest, but you can back out the 100 grand, what you came into that plan with. Okay. So if you're asking somebody and you're talking to somebody in an appointment, like, oh, I just changed jobs. Oh, did you have 401k with that old employer? Oh yeah, I did. What'd you do with it? Well, it's either sitting there and you can roll it, or if they moved it in with their new employer, you can probably move it back out. Okay. So today we went over what an IUL is and what it isn't. And we went over how to find all advanced market opportunities with that FIF. Now, I'm telling you guys, it's going to be systematized. It's going to be a little different. I have it for the Quility's version right now. It'll be a little bit different for you guys, but I want you guys to get accustomed and to practice asking those questions. I want you guys to get accustomed to some extra second and third layer questions. You're just not an order taker. But Shelly, I don't know where you are. Shelly Jackson, there you are. I see you. Say you're making an overpayment to your cars. Okay, so we'll role play a little. Shelly, are you making overpayments to your car loan?
Yeah, I'm making a extra $150 a month, $200.
Okay, is getting out of debt a priority for you?
Absolutely.
Okay, great. And I move on. Now, if I pivot out of that FIF and I say, hey, Shelly, you mentioned that getting out of debt was a priority for you and your spouse?
Yeah.
If I could show you a way to get out of debt and build wealth without spending any additional money, would you be able to retire sooner?
Absolutely.
Would retirement be more comfortable?
Yes.
Okay. Now you'll get people that have all this retirement. So let's say Shelly had a 401k, she had 3 IRAs with different, different financial advisors and investment firms. I would say, Shelly, is putting money away for retirement, it's a priority for you and your spouse?
Yeah.
Well, let me ask you, do you think taxes are going to go up or go down in the future?
Oh, they're definitely going to go up.
Go up. So do you realize that all of your retirement eggs right now are in a taxable and retirement basket?
Really?
Yeah. So it's called deferred compensation. You're deferring all those taxes until a time in the future when taxes are going to be higher.
Mm.
What if I could show you a way where you could put money aside and have it tax-free in retirement and not be subject to market risk? Is that something you'd be interested in?
Yeah. Sign
Okay,
me
great.
up.
I just pivoted into an IUL. I just pivoted into debt-free life. And I didn't sell her anything. She told me it's a priority for her. So now everybody on this call, Shelly probably spoke more than anybody else on this call. Mark spoke, right? William spoke a little bit. We're going to remember what we said that more than anybody else. That client's going to remember what they said, and they're going to get off the call. Shelly's going to have to call and go, man, Jeff really, he really, this is what we need, because it was her idea. The Socratic sales method. You guys, I've worked with agents. I can think of a guy, Jim, down in Florida. Great dude. He's a great guy. I need to reach out to him, actually. I said, Jim, you're preaching to me. I said, I want you to take a Post-it note and write life insurance agent. Okay. And then he showed it to me on Zoom. I said, cross it out and put professional question asker. Okay. You guys, I tell my kids all the time, you have 2 ears and one mouth for a reason. You should be listening more than you're talking. Okay. If you can ask your clients questions, they're going to tell you what's important to them. And then you're not selling anybody anything. Okay. Combine that with some pace, tonality, bring your clients in, get them all excited, right? 1 trillion, right? We can do all those things, right? Will make you better salespeople, but you got to find the opportunities. Okay.
Hey, Jeff.
Go ahead.
I do have a question, if I may ask.
I'm opening it up. Questions. I'm done. Questions. Yes.
Very good so far. Thank you so much for your time and everything that you do. I'd like to hear how you would engage a HR representative at a corporate company, and basically hear your elevator speech and how you would engage them with 401k versus IUL, just getting that first appointment, what you would say and how.
So I've done a lot of workplace stuff. I've been really successful at it. I know there's been programs, and I was with Assura, I left Assura, I came back to Assura. It's just being you. Just be Candace. Okay. Hey, look, my company specializes in 5 key areas. Okay. It's really unique. You guys probably provide a 401k. You be the HR person. You provide a 401k, health benefits, things like that.
Yes, we do.
Okay. Well, what I do is a little bit different. I'm here to educate your staff in 5 key areas. Okay. The first one being, I want to protect them and make sure they have proper protection of their family and of their income. Okay. Notice I didn't say mortgage. Why didn't I say mortgage? You guys know why I didn't say mortgage?
Not
Muhammad,
everybody
what's your
exactly.
mortgage, Muhammad?
Yeah, no, because it's not everybody that owns a home.
Well, let's say you do. How much is your house, Muhammad? Give me a number.
Right now, it's about $500,000.
$500,000, $500,000. So then, if I'm here to just give you that death benefit of $500,000, I have no business selling you a $700,212 death benefit, because you told me your house is $500,000. I'm not here to protect your mortgage. I'm here to protect your family and your income. See that? Okay. The second thing I do is protect your employees from market risk. Okay. Let's play a game. Okay. Let's pretend it's September of 2008. Okay. Jeff Sigworth is going to retire December 31st of 2008. What happened in October of 2008? Right? So if I was going to have a party, right, would my wife call up Mark and be like, hey, Mark, hey, Jeff's retiring. Come over to the house. We're going to play cornhole. Jimmy Buffett's going to be playing margarita machine, right? 2008 happens, or October happens. Guess what? Jeff ain't retiring. Does Creasy get on the phone and say, hey, Mark, cancel the plane ticket, buddy. No margarita machine. Jeff's not Jeff's not retiring. Okay. Third thing we do is protect your clients or protect your staff from unnecessary taxes. Okay. Do you think taxes are going to go up or go down? They say go up. Right. We have some tax-free initiatives. The fourth thing we do is we protect our clients from unnecessary interest and debt. We have a debt elimination plan. It's not debt consolidation. It's not a get-rich-quick scheme. It's not multi-level marketing. Okay, it's a true debt elimination program where we use techniques and methods that have been around for decades. And now with our exclusive software, we're bringing them together in a way where we can get common people like you and me out of debt and build wealth with no additional money. And then last but not least, you know what we do? We make sure our clients never have to worry about outliving the retirement. So the first one is, God forbid something bad happens, but what if you live until you're 98? And what I've found is a lot of companies like yours don't offer all that suite of products. And I'm just here to give information. I'm not here to take them away from their job. But what I'll do is I'll provide some free information and education for them, and they can do what they want with it. Right? Done. That took what? That took 3.5 minutes. That's exactly the conversation I'd have with an HR representative. And they'd probably look at you and go, okay, can I sit up in the lobby? Can I bring some pizzas for everybody? Right? I'll bring in some pizzas. I'll pay for lunch. Get me in front of a bunch of people. Or I like where you set up just a table and you get people passing organically and you have a little conversation with them that way. Good question, Candace.
Jeff, this is Robert. Quick question.
Yes, sir.
You mentioned that you would recommend participating whole life over an IUL for an over 50 client. Why is that?
Great question. With some gray area there, because cost of insurance gets too high. Okay, depending on how much. I mean, if you have somebody that's 53 years old and they're going to put $150 a month away, it's not going to do much for them. Those guarantees inside the participating whole life are going to give them that protection. Because if they're putting money away, and let's say the first year or two, they hit floor, 0, 0, 0. That cost of insurance is going to eat that premium right up. Okay. Whereas a participating whole life with the guarantees will keep it going. But at that point, you're kind of getting to the point where you're missing the accumulation phase of retirement. Now, if you give me a 52-year-old that wants to put $2,000 a month away, yeah, done. Do an IUL all day, every day. But $200 a month, that's not going to do you much. Okay. Awesome. Thanks, buddy. What other questions you guys have? I got a couple minutes.
Hey, Jeff, Mohammed.
Yes, sir. Hey, buddy. Good to see you, dude.
Nice to see you too. What's your comeback sometimes when people try to tell, well, if like Shelly's situation that you said she has 3 IRAs and a 401k plan, and when they get to retirement, they tell you, well, I'll be on a lower tax bracket. Oh. What is normally your comeback?
I wish I was on a Zoom. Okay. I wish I was on a Zoom because I use the whiteboard. Okay. So let's say you're putting $500 a month away. Mohammed, give me a dollar amount that 401k is gonna grow to.
Say about 300,000.
300,000. Perfect. Now putting $500 a month away, that's $6,000 a year, right?
Mm-hmm.
So $6,000 a year. Let's say you're in I don't know, 20. Where do you live, Mohammed?
Maryland.
High tax state. Let's say you're at 30% tax bracket. Okay. So to put that $6,000 a year away, you're actually saving $1,800, right? You're not being taxed on that $1,800. Okay. But let's say your 300,000 grows, and when you retire at 68, 70 years old, your 300,000, how much can you pull out of a retirement account? Okay. How much can you pull out of a retirement account every year? Say 5%. 5%.
Okay. Yeah, 5. Okay.
So that's $15,000. Okay. That's 50. So if you have $300,000, you're going to pull out $15,000 a year in retirement. How much in taxes are you going to pay? Are you going to go down to a 20% tax bracket?
Shouldn't that be less than that at that time?
15, state and federal? Not going to be any less than 15.
Okay.
Right? I know North Carolina's is 5%, and then you would have a 10% federal. So if you're getting $15,000 times 0.15, that's $2,250. And that's only $2,250. You're only making $15,000 a year in retirement.
Yeah.
That's $2,250. So would you rather pay Would you rather save 18 today when you're working, when you have your kids as deductions, when you have your mortgage interest as a deduction because you just filled out a mortgage protection card, or would you rather? Oh, my phone's going. Or
Yeah, I
would
see.
you
I see
rather
the
pay
number.
$22.50? Hey, it's a no-brainer. Pay it today while you got deductions. When you're on a fixed income later, don't pay it at all. Have it tax-free tomorrow. Okay? It's a little easier when I have the numbers out and I can actually like draw and stuff, but no worries. I think that answers it.
Yeah, it does. Thanks.
Anything else, guys?
Hey, Jeff, this is Steve. Hey,
Yes,
man.
sir. Yeah.
So you go back to your question of, yes, hey, I'm contributing to my 401k and I'm paying, I'm contributing that 5% that my employer is, and I'm contributing another 5%.
Yeah.
Someone's going to say, it's just more of a hassle. I don't want to change that.
Then you better sharpen your skills as a salesman. You got to be able to show the value, dude, right? You got to be able to show the value. It's not, I have a couple of things. You can't sell stupid, right? You just can't. But you got to show the value. There's only 3 objections. What are the 3 objections? Everybody on this call, there's only 3 objections. What are they?
I can't afford it.
Price?
Yeah, I was going to say.
Price?
Gotta think about it.
Hold on.
Think about it.
Hold on. Price. Okay. But with the FIF, we take that objection away. We already know what they're spending. Okay. We found the money. So price is gone. What are the other 2?
I need to think about this.
Well, you need to think about it, but what's that really come down to?
I don't understand.
The product or Steve, because nobody likes Steve. No, just kidding, buddy. Person, price, or product. If they don't like you, if they don't like the person, there's nothing you can do. Okay. We've eliminated price. We just have to show the value in the product. That's your job. Okay. And that's what I'm here to help you do. Guys, I got to run. I got another call. I'm 3 minutes late too. I'll see you guys next week. We'll do illustration and presentation. Okay. You guys cool with that?
Yeah, we very much appreciate it.